Singapore's stock market is buzzing with opportunity right now, and investors are eyeing several top picks that could deliver strong returns in the months ahead. On the 25th of July, 2025, there are five standout stocks that analysts and fund managers are watching closely. These aren't just random names, they reflect Singapore's latest economic shifts, global demand, and policy direction. First up is Sea Limited. Though listed in the US, Sea is a Singapore based company and one of the region's tech powerhouses. It runs Shopee, a major e commerce platform, along with SeaMoney and Garena. After gaining over 160% in 2024 and continuing its rise this year, Sea is becoming a favorite for investors looking at both growth and profitability. Analysts expect its Q2 earnings to jump by over 260%, with revenue pushing past 4.5 billion US dollars. That kind of performance is rare in today's climate, and it's why many consider Sea a gem for 2025. Next, we look at DBS Group, Singapore's largest bank. Known for its stability and reliable dividends, currently around 4 to 4.6%, DBS benefits from rising market confidence and a potential revival in lending as inflation cools. It's a top pick not just for income seekers, but also for those who want exposure to Singapore's financial backbone. Then there's UOB, or United Overseas Bank. Like DBS, UOB is a heavyweight in the STI index and is being closely watched for its role in regional lending and trade finance. Analysts continue to rate it a buy, thanks to its strong balance sheet and exposure to Southeast Asia's economic recovery. For something a little more high growth, AEM Holdings is worth watching. This small-cap stock plays a big role in global chip manufacturing, producing semiconductor test equipment. With the world leaning heavily into AI, automation, and tech production, AEM is well-positioned to ride the wave of global demand. It's one of the few Singapore tech names gaining serious attention from both institutional and retail investors. And finally, there's Sheng Siong. While not as flashy as tech or banks, Sheng Siong's strength lies in its resilience. As one of the top supermarket chains in Singapore, it consistently delivers strong earnings, tight cost controls, and dependable dividends. It's a defensive play, ideal for uncertain times or for those looking for stable returns without high volatility. But why are these five stocks considered top picks right now? The Monetary Authority of Singapore has just injected 1.1 billion Singapore dollars into local equity markets, with a larger $5 billion fund in place. This is a game changer. The aim is to improve liquidity, support mid-cap and small-cap stocks, and attract more institutional capital. That means more activity, better valuations, and higher confidence in local stocks. JP Morgan also recently upgraded Singapore equities to overweight, setting a target of 4,200 points for the Straits Times Index, about 6% upside from current levels. This shows growing global interest in Singapore markets, especially with rising dividends and relatively low valuations. Meanwhile, strong earnings reports, such as from Marina Bay Sands, highlight how sectors like tourism and hospitality are bouncing back hard. This further strengthens consumer spending and opens new investment angles for those looking beyond just banks and tech. Still, there are risks to keep in mind. GIC, Singapore's sovereign wealth fund, recently cautioned against valuation overshoots as investor excitement grows. Global interest rates, China's economic health, and tech demand all remain key external factors that could swing the market either way. So what economic indicators should you watch? Core inflation is one, currently easing to just 0.6% year-on-year. This could prompt the mass to keep monetary policy friendly. Other things to monitor include earnings results from banks and tech firms, trade data, and any updates to Singapore's listing rules or tax incentives for the stock market. To wrap things up, if you're looking for stocks that combine strong fundamentals, sector momentum, and government support, CLTID, DBS, UOB, AM Holdings, and Sheng Siong are all compelling choices. Each offers a different angle, be it high growth, income, or defensive stability, making them well worth a place on your watch list for 2025. If you find this interesting, don't forget to like, share, and subscribe to our channel, 2230.